Hey everyone, welcome back. This is going to be a quick recap on yesterday's trade. It's Thursday. Today is Friday, and let's get into today's trade. So, what my bias was for Thursday was I was bearish, and so the reason why I was bearish is if you look at the higher time frame. Of course, we're in this bearish channel right here, as you can see. And during this week, I had a feeling, well, not a feeling, more like some analysis that we were coming up to this point. We have this daily fair value gap that's price is reaching into. And if you look on the 4 hour, you will recognize a pattern. See how price has these fair value gaps overlapping with this inverse fair value gap. And what do you recognize? Well, market structure shift, tap into fair value gap or inverse fair value gap or BPR if you'd like, and what? Reversing. So same thing like I've said before, price is fractal. So what you see on the higher time frames, you'll find on the smaller time frames. So that same structure, inverse fair value gap entry model and all that, same thing you can find on the higher time frame. So I was framing my trade based on that because we were expanding this whole week, and I believe we reached our weekly goal here at this 4 hour gap. And if you remember from the trade previously, my targets were up here, but only ended up getting reached on Thursday. And so another reason why I was bearish is because usually when we find that London session during the morning draws towards your target for the week. So if we're bullish and we have a target for the week where price is most likely going to reach to its max, at the max height, the max price, then it's not very likely that we'll have much movement in our New York session. That's the lesson for this trade. And the reason I did take this trade, though, I shouldn't have, but I took a chance. It's not a good thing to do, but I did manage my risk and manage my trade position well. So I'll tell you why I entered here, what my logic behind it was. So I don't know if I've mentioned this previously, but sometimes when price creates a long candle like this at market open at 4:30, what you'll find is that price will sometimes retrace into the gap that's formed on that candle. So whatever fair value gap is formed on that 4:30 candle, or what American time is, what, 10:30? No, am I wrong? 9:30, yeah, sorry, 9:30. Then usually price will retrace into that gap and continue the trend. And so that kind of worked with my overall bearish bias as well. And so if you go down into the 1 minute, I was just looking for my liquidity sweep and taking my trade as I see the model. And if you can see here, we have our little liquidity sweep. You see this little high getting taken out, and then this is the leg that retraced into that gap. And so this was my liquidity sweep, a break of structure right here, break structure right here, liquidity sweep, up here. And what do we leave behind? A nice fair value gap. I was going for a fair value gap entry here, and you'll see that when price reaches up into that fair value gap, that's where I took my entry. I had my stop loss around here, entry around here, and I decided to take that trade, knowing full well that it might not work out because of market conditions. We already had most of our momentum this morning, and I was not feeling very confident with our overall volume here. So it was a very quick trade. Once I got in, as soon as I got in, I went straight back out. I put my stop loss at break even, or at least tried to, but I was a bit sloppy on the placement of my stop loss. So you'll see that my loss is actually -$6, I believe. I'm just gonna bring up my trade right now. Where's this trade? Okay, cool, there we go. You'll see I entered there on that fair value gap right there, if you can see. And just as quickly as I entered, I moved my stop loss to break even there. As you can see, I was not happy with how price was moving. These low probability conditions you shouldn't try and force. And so you can see I tried to put my stop loss there, break even, but it was not accurate enough to stop me from having any losses. So I did have a small little loss, unintentional, but you can see there, that's where I got stomped out. And yeah, there you can see that line isn't straight. It was meant to be straight so that I could have zero loss, but unfortunately minor loss, and that's okay. I'll show you now the totals. So what I've done is I've started a new account for 2025. I think it is appropriate to just start off on a fresh start so that I have a good record, a good portfolio from this point onwards. I unfortunately only thought of it after my 2nd Jan trade, so it's not gonna count, unfortunately. I wish it did. It would have looked so great on this account, but we'll start from Wednesday's trade, and from here on sticking to just this account. Just note, this is demo. I don't want anyone to be confused that I've been trading real money. I've been using demo account this whole channel for teaching purposes. But other than that, I am happy with the trade yesterday. The better thing to do was to stay out of the market, especially since if you, like me, had the same suspicion that New York session was not going to be that great. But if you have that suspicion, it's best to stay out than to, try your luck. So yeah, that's the lesson for this trade. Hope you guys have a good one today. I'm going to try and attempt to look for most likely sells today. So we'll see what that's like, and I'll keep you guys posted. Please like, support this channel, subscribe. It really helps get all this content out there to the world. And that's it for this video. I'll see you guys in the next one.